How to swing trade. This is an excerpt from the trading course. So this video is going to cover slides 6 and 7 from the section called How to Swing Trade. And How to Swing Trade is just one section of about 25. So what you're about to see in this video is a very small part of the complete course. So let me turn off my video and go ahead and get into it. Signal bars and context. You really want to be looking for two things when you're trying to enter a trade: great signal bars and great context. Something to keep in mind, context is more important. Let's look at an example. Looking at these bull bars, this one and this one, they kind of have this classic look, right? Any sort of teaching that's been done in trading usually has these candlesticks as great examples for signal bars. The body is closing near the high. There's a bit of a tail. The tail is not too large, right? These look like great signal bars, great areas to buy. Why does it fail? Why does the market dip down below where your stops would be? Why do you get stopped out if these are such great signal bars? Well, context is more important. The context we have here is that this is a bear trend. One small bull bar, it's not going to be enough to reverse all of this selling pressure. Even a double bottom like we have here, more likely to fail. Even if the market moves up a little bit, more likely it'll come back and try to test down here. So not great chances on trying to buy here. These do have small bodies, right? So if you're buying and if you put your stop right below, you're not going to lose that much. But you have to take into account your probability, right? There's more than just the variable of your risk. There's also your reward. And in this case, we're talking about probability. Your probability is lower, and that's going to hurt your expected profit when you're trying to take trades. You don't want to die from 1,000 paper cuts, right? You can get squashed once, or you can lose your dream of trading like this, taking many bad trades where you lose small, but you lose many times. Check out this bar. It's a small bull doji, and it's following about 7 bars down, 6 of them with bare bodies. That doji is not going to reverse this selling pressure. The market's going down here for a reason. If the bears can control 7 bars in a row like this, there's something going on and the market's probably going lower. If it doesn't go lower immediately, it will probably reverse back down after a reversal attempt. Look at this bear bar now. This is a reasonable place to be getting short. After this one small pullback, the market's probably going to be heading lower. This bar is closing below the low of this bull bar. It's closing near its low, and the body is most of the bar. So this is a good signal bar, and also the context is decent. The context is that we're in a bear move. Something is going on. The market is going down. I would place my stop above the bear bar here. Other options is to put it above the high of the move. And think about your two options there. If you put it above the bar, your risk is going to be less. Well, your probability is going to be lower. If you place it up here, your risk is going to be more, but your probability is going to be higher. It's going to come down to your personality, in my opinion, on what's best for you. Do you want to lose less often, but when you do lose, you would lose more? Or do you want to have a higher winning percentage? My preference is usually to place it immediately above the bar and go for 2 times my risk. So I get short below the bar and try to get out at 2 times your risk. 2 times your risk is the minimum, right? So if you're swing trading, you should be going for at least 2 times your risk. If you're correct that the market is a bear trend, it's probably going to go for a lot more than 2 times your risk. A strategy to consider would be to take off part of your position at 2 times your risk and then move your stop lower and then continue to hold part of your position down. So you would take off half at 2 times your risk and then hold the other half until the market's no longer going down. Look here, we have a double top in a bear trend. And then we have this bear bar that's closing below its midpoint. And the bar is mostly body. There's a little bit of a tail on the bottom. It's not too bad. It is closing below its midpoint. If we're in a bear trend, this is a good place to be getting short. After a double top, it's a pullback. I'd be getting short below that bar. Once again, my preferred option would be to place my stop above that bar. And I'd be going for 2 times my risk down here. You would have had very little issue getting that 2 times profit. Double top, another double top in a bear trend. And we get a good looking bearish signal bar. It's closing near its low. It's closing below a prior bar. So like getting short there. We have a failed second entry long. So the first entry is here. Some bulls would be buying above this, although I would avoid trying to buy there as we are in a bear trend. So just forget the idea of trying to buy until something else happens. Only be looking for shorts. So bulls buying above here, they're going to be wrong once. And then if they're buying a second time, and then when the market starts to turn back down, they're going to be wrong a second time. When traders are swing trading, they'll usually let the market tell them they're wrong once, like this. But they're not going to accept being wrong twice. That's why when you see a second entry fail, that usually means the market is about to reverse. And then these just end up being pullbacks and failed reversals. So we have a failed second entry long, and bears will get short again below a bear bar, closing below its midpoint. All right, next slide is trend trading. So check out this bull trend. Moving average is a great trend following tool, and I always have the 20 EMA on my chart. Look how it acted as support on these 2 points. First time in a while the market has touched the moving average. Usually that first time it gets bought. And then it's great to see the moving average continue to act as support. That means that the trend is continuing, and as long as it's acting as support, it'll probably continue to act as support. So it's a great trend following tool. Once the market is able to get below the moving average, then it ends up acting as resistance. You can see there were 2 tests of the moving average here. So I really like to rely on the moving average to keep me in the direction of the trend, and I trust the support and resistance that it gives. If the market is above the moving average, like it was most of the day, only be looking for buys, preferably swing buys. Right? We want to be buying and going for more than we're risking. Whenever there's a trend, whenever we're above the moving average, there is a bias in that direction. So by us going for more profit than we risk, we're taking advantage of that bias. This is the 9:30 open of the E-mini. You can tell we had a big gap up because it's way above the moving average. Anytime you have a big gap in one direction, it increases the chance that you're going to have a trend. This trend could be down, but we never got any strong reasons to be short. Instead, we always stayed above the moving average. We got higher lows and we got higher highs. So only be looking for longs. Double bottom on the open above the moving average. Possibly this is the low of the day. Possibly the day is going to trend up for the rest of the day, and then this is the low. Some bulls will buy here betting that they can get a swing trade. On the open, and this is covered in one of the other videos, on the open, 50% of moves reverse, even strong moves. So even very strong moves, it doesn't matter, 50% of them reverse. So why would we be buying here? There's a 50% chance that the market's going to reverse. Well, bulls that are buying here, they're betting that this is the low of the day. And they were correct. They're not buying here and exiting on this next bull bar. At least most of them aren't. People that are buying here, they're going to be holding for the rest of the day. And sometimes you'll hear traders that they're wrapped up by, the first 30 minutes of the day. Well, some of those traders, what they're doing is they're finding an early low of the high, early low or high of the day, and they're swing trading. And some percentage of the time, they're going to catch the very low or high of the day, and they have a very easy day. They place a trade, and then the trend just continues up, and they just move their stop up throughout the day, and they exit at the end of the day. So bulls are buying here, not to try to go for a scalp. Most of them are holding, betting that after this big gap up, there's going to be more buying pressure, and the market is going to continue up higher. Another buy option here. Bull bar, decent sized body, closing near its high. So bulls will also be buying above this. Second entry long. Bulls have a chance to buy above this bull bar. Not the best buy because there is a big tail on the top. That's also following this fairly large bear bar. So, in fact, there's probably more sellers above this bar, right? After the bulls have made several attempts up here, it's reasonable to think that the bears are going to make a couple attempts, which they do. The bears' attempts to go lower never are able to get below the low of the day or below the moving average. Even if it did go below the moving average, if the bulls were able to put the market back up above the moving average, then that would mean the bull trend is back on. So first entry, probably not the best because of this our context here. Second entry is better. The bears were trying to go lower here multiple times, and they're failing. Then we get the biggest bull bar of the day. Micro double bottom above the moving average. A lot of bulls will go long there, betting on higher prices, betting on that this is going to be the low of the day, and then they can hold it all the way up here. This is a head and shoulders pattern. We have a left shoulder, the head, and the right shoulder. So it's a head and shoulders bottom above the moving average. Another reason for the bulls to buy. They'll be buying above here. Another way to look at this head and shoulders bottom is consider these lows. These lows are acting as support here. For whatever reason, when bears are trying to go lower, they couldn't. It got bought here, and it got bought here. So this is an area of support. They did break through here, but then quickly reversed back up. Then once they tried to break through that level of support here again, they couldn't. And that's effectively what a head and shoulders bottom is. And so when I'm looking at this kind of movement, in my mind, that's how I think of it. I think of it as a failed break lower of support. And then reverses up, go to bull bar. So you can call it a head and shoulders bottom, but really what's going on is that there's support through here that bears broke through and failed, and then they tried again and failed, and this time they're even higher. So the bear is going to be giving up after a bull bar. Bulls that are buying here, probably a lot of them will put their stop below the bar. I think that's reasonable. And the minimum swing should be 2 times your risk. So it is a large bar, but if they're correct, the market's going to go up probably for the rest of the day, and they're going to be able to exit up here. Now consider this doji bar here. They got pretty close to their target at this point. Once you're that close and you have that much profit, I think it's okay to try to exit below a bar like that. If you have a reversal bar, once you're just almost close, you've just almost hit your target, and then there's a reversal bar, I would say go ahead and take your profit, and then there'll be chances to buy later on. I would go ahead and just take what you have. There's a chance with something like this, if the market came that close to your profit target, a lot of other people also have their profit targets up here. And what was happening is some people were selling earlier and front running it because they weren't confident the market was going to go all the way up to it. So if you see a strong reversal bar, just right below your target, then I think it's okay to go ahead and get out. Another place to buy, we have a high 1. So we have this bear bar created a high and then a pullback. And when it goes above that pullback, that creates a high 1. High 1 in a bull trend, that's a reason to buy. That's a good place to buy. It's also a breakout pullback. This bear bar broke above these 2 prior highs here, and then it pulled back into this range. Then we got a bull bar. So this is a breakout pullback, and to me, this pullback is effectively testing these highs. Then once we get this good-looking bull bar, we've continued to get these higher lows. We're still above the moving average. I think after a breakout pullback like this, that's reasonable to buy for a swing trade. Many would put their stop below the bar, and they'd be going for 2 times their risk. At least 2 times their risk. So they'll buy here, get out here. Others, some will take off their profit at 2 times their risk. Others would take off half and hold the rest. And others would go for 3 times or 4 times their risk and really try to maximize what they can get out of the day. After this breakout, we do have this pullback to the moving average. And notice how this gap stays open. So we have the high of this first range in the breakout. And then this low here did not overlap with that breakout point. So that means there's a gap. That means that the bears are not too strong, and the bulls are strong enough to be able to keep this low above that high. It's also testing right down to the moving average. So for that reason, I see this as being a reasonable swing buy. I'll go back a second. You notice you would have been stopped out if you put your stop below there. So that comes back to the question of which option do you choose. If you place it here, you will be stopped out more often compared to if you place it down here. If you place it down here, you will lose more when you do lose. I think in this case, it would be more reasonable to put your stop below this bar here. So this is the major low. After this 6-bar breakout like this, I would call this now the major low. And often what you'll get when you pull back to the moving average like this first test is not usually immediately bought. Well, it's not always immediately bought. A lot of the times it acts as a bit of a trap, and the market pulls back lower and then stops you out if you put your stop right there. So in this context, I think it would be okay to put your stop further down. And if the market does pull all the way back down to this major low, that means the market's probably not actually in a bull trend. It's unlikely to come down here and then continue up. If it comes down here, we're probably then in a trading range or a bear trend. So in this context where it's this first pullback to the moving average, it's probably better to put your stop lower. Second pullback. Now the true gap closes, but the body gap stays open. The body gap being the closes of these bars through here, and then the closes of these bars on this pullback. The tails overlap, but the bodies do not. A body gap is still a sign of strength. It's also a double bottom at the moving average. We can see the bears tried here and then tried again, and they made several smaller attempts to go lower here, and those are failing. So now after a second attempt lower and the bears aren't unable to do it, remember after a second attempt, they usually give up. So probably buying is back on around this point. So I think buying above here, buying above this next bar, buying above this third bull bar, closing near its high with a decent sized body. Then another good looking bull signal bar. It's a high 1. And it's coming up near these highs. But look at the buying pressure we've had. Right? We've had all these lows that are higher up and higher up. And now we're getting to this point, and there's this buying pressure is starting to build up. After these bears have failed a couple times, I think because of that, it's okay to be buying into these highs, because often you'll get a little pop up that'll break through these other highs if the other side has failed to go lower. Whenever you see a failure of one side, that gives the other side a lot of strength. And then check out this buy here. It's kind of the same story. You're buying right into these highs, but this buying pressure has been building up. The bears tried to go lower here and here. They tried to go lower here, but they couldn't even get back to the moving average, and they're much higher than they were here. Something else that's going on here is a cup and handle. We have this larger bowl shape, this cup here, and then a little bit of a push up here, and then pull back, then a smaller bowl. This is the handle. So we have a cup and handle, and that's a continuation pattern. So buying here, I think there's a lot of pent up bullish pressure that will be released here, and I think it's very reasonable to be buying there. I think here you could buy for a scalp or for a swing trade. I think either works. You can do a scalp because, like I said, I think after it goes above this bar, there's probably going to be a fairly quick pop up. So because of that, your probability is higher, and then it's okay to be scalping. Another buy, a high 1 buy, bull bar closing near its high after 5 bull bars here. So another good reason to buy. We also have a gap above the high of this bar and the low of this bar. So bulls are maintaining their strength. Now at this point, we've had 6 bull bars closing above their midpoints and 7 bull bars in total. That's great for the bulls. The issue is it's coming late into the day, right? So imagine if you had taken any of these buys down here and you had held the whole day. You say, wow, I held the whole day. I have this huge profit. And now I'm getting this gift at the end of the day. This is great. How many people will continue to hold their full position through this? Especially knowing it's the end of the day, right? At some point, people are going to take their profits. And what a better time to take your profits than when you're getting a gift like this, right? We have 6 bull bars up and then a 7th bar closing, even higher. It's the biggest bull bar of the last many bull bars. So these gaps, there's a good chance those are exhaustion gaps. They're gaps that are happening late in the trend. And even if people aren't taking off their full profits here, they're at least taking off part. And you can see that's what happened. The market kind of started to drift down after that. That's because the market was bullish, but it was getting near the end of the day, and the bulls were just ready to take their profits. They've said, we've made plenty of money. It's getting near the end of the day. No reason to hold more risk than we need. So we'll just go ahead and take profits. And that's what causes this little sell-off into the close. Thank you guys for watching. So the release date for the course that I'm expecting is April 15th. The pricing for this course will be around $600, and that is a very competitive price. These were 2 slides out of several hundred that will all be voiced over by myself, and will give you the information that you need to be able to become a professional trader. Think about the time not just the information, but the time that you could save by someone showing you how they trade and going through all of their thoughts and putting that all into a format where you can study on your own time. The time that would save you, potentially years. What would I pay to save years off of my trading education? I would have paid a lot more than $600. Consider joining the Discord. On there, I'll have updates on the course release date and updates on other things trading related and updates on stock news. And there's just several resources and several active traders that are on the Discord, and that could be a good resource for you. So consider that. I'll have the link in the description. So thank you guys for watching. If you have any questions, leave them in the comments or ask on the Discord. Either would be okay with me. See you guys.